Bitcoin is an autonomous platform. In other words, autonomous is defined as giving power to the individual, where you do not need to rely on a central authority.
You got to give the people time. Give people what they want. Well. Don't you know you got to give the people what they want. You got to give the people time. Give people what they want.
Billions were poured into Bitcoin-related investments last year. You say that the venture capital community, the VC community, is maybe also not seeing the forest for the trees. The smart money is betting on the wrong thing. Talk a little bit about this, Reggie Middleton.
Okay. Well, they're doing what I guess one would expect them to do. They're going after the low-hanging fruit. Basically, the vast majority of the money has gone into what I call Generation 1 cryptocurrency businesses and technologies. Physical exchange or the digital coins, such as wallets and exchanges, and Generation 2 technology, which is basically integration into the back-end infrastructure of the biggest spenders in technology outside of the technology industry, and that's the financial industry. But in doing that, you run into this autonomous versus heteronymous problem. You're taking an autonomous technology and you're trying to forcibly integrate it into a heteronymous business model. It is the opposite, the actual antithesis of heteronomy, which means having to rely on a central authority. For instance, you have to rely on a bank to hold your money, or you don't have to. A lot of people choose to rely on a bank to hold their money, transfer their money, deal with stocks, bonds, exchanges, etc. That's a heteronymous system. That's the legacy financial system. Bitcoin is an autonomous platform. In other words, autonomous is defined as giving power to the individual, where you do not need to rely on a central authority. And on top of that, that heteronymous business model is antiquated, is broken, is very slow. An autonomous system basically transforms capital markets. It allows individuals to deal directly. Peter can deal directly with Paul. Paul could deal directly with Paula. They don't need a middleman. They don't need an intermediary or third party. So capital markets currently look like this: one hub, an exchange, a few big banks, Goldman Sachs, etc., and then everybody else gives money to them. An autonomous system is a bunch of individuals and companies deal directly with each other. So think of everybody dealing directly versus everybody else going through a gatekeeper, paying a gatekeeper fee, rent seeking, etc. You have a system that is zero trust. There are a lot of banking entities who are trying to take this autonomous system that empowers the individual, and they're trying to retrofit it into their legacy financial back end. So the big banks are taking blockchain technology, they don't want to call it Bitcoin anymore, but blockchain technology, which has its own tokens, which are just like Bitcoin, and force it into their back end. That's the same as taking a Ferrari engine and trying to retrofit it into a horseshoe and expecting the horse to run faster. In doing this, they're taking the autonomous, independent aspect of the Bitcoin technology out and trying to force the technology to adhere to their centralized heteronymous system. So basically, we take this independent magic and we're going to make it cause you to be dependent upon us. That is not going to work if the populace is aware of the power of Bitcoin. It simply cannot work. Right now, in 2016, where you could put someone out in space at the drop of a whim, you could even take a commuter shuttle out to space. It still takes 3 days in the States to settle a stock trade, 2 days in the UK. That's ridiculous. The Veritaseum system can do it in as little as 5 minutes, no more than 40 minutes.
You have your own blockchain-related company that you've started up because you're an entrepreneur. You've been on Wall Street for many years. You saw the writing on the wall. You went ahead and jumped into the crypto world. Your company. It's a platform for P2P smart contracts. Can you tell us about what you've got going with your company?
Okay, so what we've done is in 2013, I read the white paper and the wiki site on Bitcoin. I read the part about smart contracts. My jaw hit the ground. Programmable money that you can program, make self-executing contracts that can't be broken. We've decided to take that and make derivative-like contracts out of the Bitcoin technology that allows you to buy and sell exposure to any value in the world. Currently about 45,000 tickers, all assets from around the world. This technology, these contracts, can be delivered through web pages that run in anything that's connected to the internet via a popular browser. Cell phones, tablets, computers, etc. So you could buy exposure to gold, sell exposure to Goldman Sachs, you could buy aluminum, you could sell electricity futures, anything you could do with a broker, anything you could do through an exchange. Zero counterparty risk, and you can't break the contract, it can't be reneged, the other side can't go bankrupt and not pay you. That's the short sell. I've created this. What I've created was, or my team and I've created was a wallet that in itself allows each and every person to become their own investment bank, commercial bank, exchange, stock exchange, bond exchange, etc., and lender. Basically, through this personal wallet, you now have loans without banks, trades without exchanges, contracts without lawyers. This is phenomenal, and as you may know, this is a direct threat to the hegemony that stands as a middleman that fails to add value. It is disruption to the nth degree. That end users can go in their private wallet and create on their own. You design your smart contract, you create a letter of credit, you trade over 10,000 tickers with the exposure of Google, you could short JP Morgan, you can go long the Korean won, you could do all this.
You really hate JP Morgan, right?
Not about hate, it's business. Business is business, right?
I don't want to put them out of the door.
It's business, not personal.
The banks are going to hate you.
You use your money to do a transaction or make a deal. All transactions are basically agreements or simple contracts. You can embed the contract or the agreement into the money. So the money is the agreement and the agreement is the contract. Hence, the agreements are unbreakable because they're programmable and embedded into the money. And we can take these unbreakable contracts or unbreakable promises and we can use them to imitate business functions, any business function. The first product that we have out, value trading, imitates the business functions of investment banks and brokerages. So you could trade roughly a little over 75,000 tickers in a wide variety of assets, asset classes, stocks, bonds, commodities, silver, across all major exchanges throughout the world, peer-to-peer, with no exchange risk. You have control of your money without a broker, without an exchange. The interesting part is there were a lot of banks that are interested in this arena. We're talking probably the largest potential market in the world, over $1 quadrillion, and that's quadrillion, several times over a trillion. In this large market, other banks have recognized this as well, and many of them have started filing patents, with the most aggressive being the Bank of America. but we also have Goldman Sachs, which filed very early. Very interesting. They all seem to have come up with this idea behind the smaller entrepreneurial companies, such as our own Veritaseum and several others, which means that you're going to have a leveling of the playing field, most likely, if the patents are issued.
You got to give the people time. Give people what they want. Don't just know you. You got to give the people. Give people what they want. You got to give the people time. Give people what they want. Don't just know you. You got to give the people.